Hi and welcome to my channel. This is a new series where I'm going to discuss few corporate terms. This video is about dividends. Stay till then to know the basics. What is a dividend? It's the distribution of earnings and accumulated profits by a company to its shareholders. Basically, the company is distributing the profits to the owner. These dividends can be issued as cash or additional share. Cash is the most popular mode, and so we are going to discuss about that. Who decides the amount? Generally determined by the board of directors of the company. But for final dividend, approval has to be provided by the shareholders. Dividend amount is always calculated on the face value of shares and not the market value of shares. If a company declares dividend of 50%, it means the shareholders will receive rupees 5 for one share if the face value is rupees 10. And payment will generally be made within 30 days from the record date. Shareholders will be eligible to receive dividend only if their name is on the company's record, but on the cutoff date. This date is known as record date. It is the date on which the company finalizes the list of shareholders eligible to receive the dividend. Shareholders wishing to receive dividend should buy the shares before the ex-dividend rate. Hold it on the record date. This ex-dividend date is the date from which the investors purchasing shares will not be eligible to receive the dividend. Confusing? Let me elaborate. Is ex-dividend date and record date the same or different? It will be the same if the settlement cycle of the share is T plus 1, that is transaction date plus 1 date. If I purchase a share today, it will be settled in my name in T plus 1 days. Transaction date today plus 1 date. So tomorrow. If the dividend record date is tomorrow, I have to purchase it today so that I will be eligible to get the dividend. If the settlement cycle is T plus 2 days, then the ex-dividend rate and record date will be different. If the record date is tomorrow, then I should have purchased the shares yesterday to be eligible for dividend because T plus 2 is transaction date yesterday plus 2 days today and tomorrow. If I had purchased today, which is the ex-dividend rate, then I will not be eligible for dividend. Hope that was clear. There are three types of dividend: interim, final, and special. Interim dividends are declared and paid during the year. It is based on unaudited quarterly results or profits. It has to be approved by the board of directors and can be declared multiple times during the year. Final dividend declared after the financial year end. It is based on the audited financials and paid only once a year. It has to be recommended by the board of directors and approved by the shareholders in AGM. Then, special dividend. It's a rare case, generally once in a while. It's based on the excess cash available or any asset sale or unusual profits earned by the company. And the board of directors wants to distribute it. This is usually recommended and approved by the board of directors, but may need approval from shareholders. Depends on the company policy. These cash dividends are taxable as per Income Tax Act. For resident shareholders, it is taxed at slab rate. For non-residents, it's 20% and based on the DTA rates. TDS is deducted if the amount exceeds the threshold limit, that is 10,000, at 10% or 20% as per the case. Hope this video was useful. Please like, comment, share, and subscribe for more beautiful videos. Thank you.